Hi everyone, it's great that you can join me today in this video. I'm going to talk about share investing today. What exactly is share investing? Let me jump straight to slides right now. Hi, it's me again. I'm now in the slides, ready to bring you through. Are you ready? Please allow me to introduce myself. My name is Emin, CFA Chartered Holder. I'm a full-time investment trainer for the retail investors. These are some of my specialties: long-term share investing, property analysis, and investment planning to achieve your objective. So please take note of this disclaimer before we proceed further. I'm here to provide education only, and whatever I said cannot be used as investment recommendations. So please take note, we cannot be held liable for any investment loss. Now, what exactly is a share? Buying a share is equal to buying ownership of a company. As per what this picture suggests, assuming I set up a company and I break it up into 10 shares. And again, assuming you bought one of the share, in other words, you will be owning 10% of this company. What I want to emphasize here is this: buying a share from the stock market, the share is the same share that you would have if you set up your own company. Of course, if you buy a share from the stock market, you are talking about a large company and of which you'll be a very small shareholder, versus the own company you set up. Yes, you'll probably be a large shareholder in a very small company, but hey, they are actually the same shares. So today, you can be the owner of all these companies. If tomorrow you want to own DBS, CapitaLand, Singtel, you can. All you have to do is go to the stock market or share market, just buy a share, and hey, you are one of the shareholders. But of course, usually a very small one. So what do you get from owning shares, buying shares? Now, when you actually own a share, obviously you are the owner of a company, and what exactly you are sharing? Okay, you are actually sharing the profits of the company. So as per what this slide is saying, if let's say the company make a profit of $10,000, and assuming you own 10% of the company, and then you actually are entitled to $1,000 of profits. Just want to share some technical terms here. When the profits are distributed to shareholders, okay, the profits will be called dividends. At the same time, you can enjoy capital gain. So what is capital gain? So let's say you buy the share at $5,000 and 1 year later you sell the shares for $7,000. And of course, you make a capital gain of $2,000. So one question you may have here is this: hey, how come the price of share will increase? Well, if let's say people are expecting that the company to perform better, expecting that the profits will increase, of course, they are willing to pay a higher price for your share. So now, let me introduce you to the shares market. Simply put, a share market is a marketplace to buy and sell shares. So firstly, companies have to put up their shares in this marketplace to sell and to raise funds. So that's how companies get listed in the stock market. Okay, so it's the first time whereby the companies sell shares to the public. Once the company is listed, okay, investors can actually buy the company shares from this marketplace. So please take note, they not necessarily have to just buy from the company. They could be buying from another investor once the company is actually listed. So only when the first time when companies get listed, yes, companies is the one that sell shares to the public. Okay, but once the companies get listed, so when we actually go to the stock market and buy, hey, we could be buying the shares from another investors. Of course, we could also sell the shares in the marketplace. So this is what the stock market or share market do for us. It allows us to buy and sell shares. Of course, now most countries have stock exchanges now. In Singapore, we have the Singapore Stock Exchange. Japan, we have Tokyo Stock Exchange. And in US, one of the largest exchange is the New York Stock Exchange. The process of getting company listed in the stock exchange is called IPO, or initial public offering. So this is where the companies, for the first time, get listed on the stock exchange and able to sell the shares to the public. So of course, not any companies can get listed. They have to meet certain criteria and they have to go through a process as per what the slide suggests. So this is definitely good for an investor because, hey, we know that due diligence is done on the company before they're allowed to being sold to the public. To buy and sell shares, all you have to do is to open a brokerage account. Of course, once you open an account, the brokers will do quite a few things for you, but hey, for you, you just have to open a brokerage account and tada, you are in business. Opening an account is free and you only need to pay when you buy and sell. You pay the transactional fees. Now, most of the trading is actually done online right now. So all you have to do is to understand the platform. And with a few clicks of buttons, you can start buying and selling of shares. So probably the next most important question, how should we buy? What stock suits us? Which is the right stock to buy? There are various strategies we can use to invest in stocks. For retail investors, I would strongly recommend this strategy called the long-term share investing technique, whereby we focus on building a stock portfolio. So basically, this chart will summarize what long-term share investing technique is about. We have to answer this question, what to buy first, which stock is good, which stock is suitable for us, and this is where the blue process will come in. We have to look at business analysis, financial statement analysis, pricing analysis, and risk analysis. After figuring out which stock to buy, we have to answer this question, when to buy, when to sell, and more importantly, how to buy. This is where the yellow part comes in, whereby we talk about portfolio management, comprising of economic analysis and portfolio strategies. Now, let me just dive in a little bit more to describe each component. Business analysis, basically, we are answering this question. Do you believe this business can sustain, can it grow? I just want to emphasize here, this is in fact the most important part in any stock analysis. So a lot of times when you start doing stock analysis, you start looking at numbers, you start looking at ratios. Yes, they are important, but in fact, this is the most important question to answer. Do you believe in this business? Do you think it can grow? So regardless how nice the numbers are, if the business fail, hey, you lose your money. Okay, so as when you progress in your investment journey, as you start getting into understanding the numbers, don't forget this very important question, okay, which you ask me is the most important one when we talk about stock analysis. Of course, I'm not saying that numbers are not important. Okay, they definitely are. It's a good way to see whether the companies are they healthy or not. Okay, so yes, we must learn how to read the financial statements and to make sure that the companies are healthy. So a lot of times, companies paint a very good picture. Companies have a very good story, but hey, if they don't have the financial health or the financial muscle to bring them through, okay, this company is not one that you want to invest in. Okay, so financial statement analysis, a very important second steps in the stock analysis process. Now, all the stocks will actually tell us they are cheap or expensive. So please know how to read them. Okay, what are the ratios to look at? So obviously, we should be going for undervalued stocks or cheap stocks, but hey, don't just cheap, but must be good. But generally speaking, we want cheap and good stocks rather than, expensive stocks. So yes, they'll be shouting at us, I'm cheap, I'm expensive, know how to read them, and you can do so via pricing analysis. Now, come to the portfolio management part. Yes, we all know that the stock market fluctuates. We all want to buy low and sell high, but trust me, that is one of the toughest questions to answer. How do we buy low and sell high? Is today low or high? Okay, so in fact, no one can answer this question. Is this the lowest point to buy now? Is this the best time to buy now? Okay, so don't try to predict. It's impossible. It's almost like rolling dice. The thing you have to do here is have a strategy. Okay, yes, market fluctuates. Have a strategy, have a plan. How do we actually build a stock portfolio with this as a background? And eventually, we actually buy more when the market is low and lesser when the market's high. In other words, what is more important is to build an investment system. So just like a soccer match, don't just focus on the goal. Focus on the match. Okay, what I mean by that, in a soccer match, sometimes you score goals, sometimes you lose goals. But what is more important is to score more goals than you lose so that you actually win the match. So think in a strategic level. So this is all I would like to share with you today. Hopefully give you some basic idea of what share investing is about. Definitely can't make you an expert investor with this video. So hopefully I get to talk to you more and help you further in your investment journey. In the meantime, if you want to stay connected with me, this is where you can reach out to me, facebook.com/IanChua. Hope you find this video useful. I really wish that I can see you very soon. Bye for now.